Hi, I'm John Gersbeck, Chief Financial Officer of Citigroup. This morning, we reported results for the first quarter of 2012, and I'd like to take a few moments to go through them with you. In the first quarter of 2012, Citigroup earned $2.9 billion, or 95 cents per diluted share. Revenues of $19.4 billion were down 2% versus the prior year, and expenses of $12.3 billion were roughly flat year over year. Before I go into more detail on the quarter, I'd like to highlight a few significant items affecting our results. First, on the revenue side, credit value adjustments and debt value adjustments, or CVA and DVA, were a negative $1.3 billion, as Citi's credit spreads improved during the quarter. We also benefited from a pre-tax gain of nearly $500 million related to minority investments. When you exclude the CVA-DVA and the minority investment gain, Citigroup's earnings were actually $3.4 billion, or $1.11 per diluted share. Our Citicorp segment generated first quarter revenues of $19.4 billion and net income of $5.2 billion, each excluding CVA-DVA. This reflected revenue growth across all three of our core businesses: Global Consumer Banking, Securities and Banking, and Transaction Services. Global Consumer Banking, our largest business, reported revenues of $10 billion, up 5% from last year, with reserve releases down nearly 50%. Excluding the impact of these reserves, we have steadily grown our pre-tax earnings each quarter for more than 2 years. We also produced positive operating leverage across all major regions in consumer banking. Our Securities and Banking business reported revenues of $6.7 billion, excluding CVA-DVA. That's 6% higher than last year and more than double the revenues of the prior quarter. Our investment banking franchise is beginning to see market share gains in M&A and equity underwriting, while our strong debt underwriting business continues to perform. We think those gains could be an early sign that investments we made in investment banking resources are beginning to pay off. Transaction Services reported revenues 7% higher than last year. Importantly, we achieved positive operating leverage in Transaction Services in the first quarter. That's 1 quarter earlier than previously expected. Transaction Services growth in Treasury and Trade Solutions reflects the ongoing expansion in trade finance, where our unique and large global footprint gives us an unmatched competitive advantage. Our total expenses were roughly flat year over year, with incremental investment spending more than offset by efficiency savings. And we remain highly focused on managing expenses while continuing to invest in key areas. We are still targeting 2012 expenses to be $2.5 to $3 billion lower than last year's reported number, excluding, of course, the impact of foreign exchange and any significant unanticipated item. We also continued to make progress in reducing assets in our Citi Holdings segment. At the end of the quarter, Holdings accounted for just under 11% of total Citigroup assets, down $16 billion during the quarter and $86 billion, or nearly 30% year over year. Our Tier 1 capital ratio was 14.2% as of the end of the first quarter, and our Tier 1 common ratio was 12.4%, up 60 basis points from year end. We also grew our tangible book value to $50.90 per share. For the first time, we're announcing our Tier 1 common ratio under Basel III, which stands at an estimated 7.2%. This quarter's results indicate that the investments we have made are starting to show results. However, while the macro environment has improved compared to the second half of last year, there is still much uncertainty, which has been underscored by the recent spate of mixed economic data and rekindled Eurozone fears. We will continue to manage risk carefully and maintain a strong and liquid balance sheet. We remain very optimistic about our prospects, given our client franchise, our unique mix of businesses, and our unparalleled footprint. To get more in-depth information on today's earnings report, please visit Citi's Investor Relations webpage, linked below this video. Thank you once again for your interest in Citi, and I look forward to reviewing our second quarter results with you in July.